Hey guys, hope you all have had a great weekend. I personally took a much needed rest and essentially back away from all news and content regarding AMC and GME. Coming back today, I came across an absolute wildfire across Twitter and Reddit. It appears that a lot of drama has grown regarding a variety of factors. Many people are getting upset with the fact that apparently there are many YouTubers saying they don't want to talk as much about AMC. Others have grown upset at the latest Adam Aron tweet, which I personally did not take a liking to either for reasons I will explain in a moment. First of all, like I said on Friday's video, this channel will continue updating you guys regarding AMC until it actually squeezes, so you do not have to worry about that. The idea behind thinking that everything is done and that because people have a general idea of what is going on in the markets we should stop talking about it can only have negative consequences overall. The reason for this is because hedge funds' next tactic aligns perfectly with laid-back attitude. You see, there is a reason why hedge funds keep on delaying the squeeze, and that is because they have to attempt to try to discourage as many people as possible from holding. If they can drag out the process and surges as much as possible, they know that statistically there will be a percentage of people who will simply sell and go away. As such, it is now more important than ever to maintain presence and continue to update and talk about what is happening. I think the worst blow hedge funds will deal will be by trying to make the stock prices as boring as much as they can, with AMC and GME possibly being traded as horizontal as possible. They need to get as many people to sell off as possible, and certainly by having the loudest voices slowly dissipate, they will definitely get people to sell. I do not share the opinion that everything is covered. We have a lot of mystery surrounding AMC and GME, and there are so many new things happening almost every week that I could not possibly ever think of moving on. Like I said on Friday's video, Simulate and Trade will continue updating you guys on a daily manner. Now, let's talk about the more controversial set of events that happened. AMC CEO Adam Aron took to Twitter this Saturday and said, as to the existence of so-called fake or synthetic shares, or the naked short selling of AMC shares, we are unaware of any information validating these theories. Also, we are unable to make any comment on the considerable trading of put or call derivatives. I did not take a liking to this tweet for a variety of reasons. First of all, AMC made a press release where they announced that on August 9th, they will report its results for the second quarter of the year. They then stated that in order to comply with security laws, they will be unable to answer any questions pertaining to the trading and price volatility of AMC securities, including the short selling of shares or derivatives on AMC stock. I am totally aware that AMC needs to be careful around the subject of shorts, as making a direct public statement could land them in serious trouble with the law. However, Adam Aron's statement goes directly against this. He said he is unaware of any information validating theories regarding synthetic shares. This was definitely a huge no-no for reasons that anyone with a single wrinkle can come to understand. 1. The statement comes across as out of touch, since naked shorts is literally the main discussion and reasons as to why so many people have invested and saved AMC. Saying you are unaware of validating information is a bit of a slap on the face. Again, I understand he cannot acknowledge the existence of phantom shares, but he is doing the exact opposite here. He is saying he is unaware of information, or data, that validates these theories when we know this to be incorrect. He is definitely talking about the issue but pretending to not know valid information regarding the massive short positions on AMC. It becomes problematic because though a lot of AMC shareholders know that he cannot speak legally to the issue, a lot of people don't. Guys, there are many people joining and buying AMC every day. When new people who aren't as informed about such legal ramifications see a statement like this and do not have the context needed to read between the lines, what do you think the effect of this has? It can definitely come across as a statement that denies the claims of all the people pushing for AMC. It does not help AMC grow at all, quite the opposite actually, so why release it? It would have been better to simply leave out this statement, as it comes across as a bit of a slap on the face to many, especially given the current climate and circumstances that are happening with the AMC community. I know Adam Aron wants the best for the company, as so do we, and making such a statement could deter a lot of new investors and piss of many existing investors from buying AMC. Again, I know he knows all this information, and that he is legally held to not talk about it, but why make a statement saying this? Simply abide by the same guidelines AMC shared about not making any statements. With that said, I did overreact a bit on Twitter to this. I just found this statement to be so provocative and come at the worst possible moment, especially now that the community of AMC seems to be at a bit of a low with so much uncertainty regarding AMC content. I love AMC, I know it is going to squeeze because the vast majority of people aren't leaving, and I simply did not find those comments to be helpful or needed at the moment. Again, I did kind of overreact using a bit of strong language upon reading this, and without missing a beat, the response from a lot of members in the community was anger and confusion. Remember, just because you understand the context of what he is beholden to say and not say legally speaking doesn't mean everyone else does. As such, better language or not even directly addressing it would have been a better approach, like the AMC press release stated was their stance going forward. With that out of the way, let's get going again like we always have. I am currently working on another DD piece, so stay tuned for that this week. I am super excited about it soon. A lot of representatives in the government seem to have voted against the Short Sale Transparency and Market Fairness Act. This did not come as a shock or surprise, but the disappointment was there all the same. The putrid disgust I felt when I saw the amount of representatives voting against an act that is meant to add transparency and a modicum of balance to the market is second to none. For those that don't know, this bill will short the reporting period for disclosures from quarterly to monthly, while requiring these reports to be filed within 10 days from the end of each month. It directs the SEC to study and report the use of confidential filing request among a variety of other rulemaking directives. The bill barely managed to pass as the tally came at 27 voting in agreement to pass the bill with 22 voting against the bill. This country is absolutely rotten to the core, and as I have said before, there will be serious repercussions to the economy after the squeeze. I ran a poll where a scary percentage of people said they are not interested in investing ever again after the squeeze because they believe the stock market to be unreliable as the government doesn't care to enforce and regulate members. This poses a challenge for the future as a lot of the liquidity and much needed participation from retail will quickly disappear all of a sudden when people simply pull their money out of the market. Given that my theory as to the squeeze comes as a result of inflation causing a market crash, this withdrawal from retail will have an even bigger impact on the economy's ability to bounce back from such a dip. Hedge funds might be the scum of the earth, but let us remember that it was through the SEC's negligence that we have ended up where we are today. They are the ones liable and the ones that should be held accountable for everything that has happened. Every politician that votes against more regulation and government oversight, especially on bills that aim literally for just a bit more transparency, are not fit to rule or govern. Their credibility to put people's interest before them is obliterated the moment they vote against bills like the Short Sale Transparency and Market Fairness Act. Lastly, let's quickly talk about AMC and GME performance. AMC finds itself in a symmetrical triangle pattern. The stock is currently keen on testing support right now. If the stock manages to break support, we could see it finding some support at 36. If that support wall falters, AMC will most likely hit $34. $31 is currently the biggest support wall in the 30-day chart for AMC, so if we get short attacked heavily, expect a bit of a bounce around that price point, which makes sense as it is also the threshold price for options. If we break resistance, we could see a quick run to $40 once again, which is where the first big resistance wall lies. If we build above that and have another surge, we could potentially reach 45, which is where the next big resistance wall lies. I do not want to go to crazy with these technical analysis as the manipulation for these stocks is so vast that oftentimes, they act in direct contradiction to many of the rules we have come to expect on normal traded stocks. I just want to give you guys a perspective of what patterns we are likely to see given the most likely movements the stock is bound to make. Always keep your mind open to anything. GameStop has had a crazy month. The stock fell for most of the month of July. Though it made many attempts to bounce up, the stock was consistently hit with short attacks at key resistance points to exploit weaknesses and dip it. GME is in a bit of a bearish channel right now as well as a bearish wedge. On the wedge, the stock is currently approaching the resistance which lies around 162. If it manages to break it and build on top, we could see the stock reach 164. If breaks that, it could easily run to 168 and even 170 again. On the channel pattern, the stock nears the support near at 154. If the stock breaks that, it is very likely that it will reach $150 again. From there I would expect another bounce up before another series of attacks. I think by Friday hedge funds would want this stock to be near the 150 as much as possible. And with that, I want to thank you guys so much for your continued support and love. Listen, I know we all have different perspectives and opinions on what should be said and what should not be said, what things should happen and what should not. What is important is to listen to each other, and learn to disagree and exchange opinions without resulting to attacks. We are all here wanting the same thing. Never forget that what makes us strong isn't only holding, but collectively coming together to form a cohesive community of investors that buy and hold. We are all so different and come from all types of backgrounds. I think what is most beautiful is how even amid these differences, political and cultural, from different nationalities to different religious beliefs, we have come to form a unity and bond that is strong enough to cripple some of the biggest institutions and powers in the world. Thank you for making it to the end of the video. Drop a like if you liked the video and let me know what you think below. Big shout out to all the Patreons and one-time donators, whose contributions have carried this channel to new horizons. Thank you all so very much for all that you do, and to the moon.